Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, we're going to start with the price of Bitcoin because currently it is under $110,000. So if you look at the daily chart, the RSI is near that oversold zone. That is what we want to see. I know some of you are going to be like, what, Tony, are you crazy? But it's all cyclical, like I've been saying, right? The markets pump, the bulls get in control, they pump the market to the overbought zone. Then the market corrects and it goes to the oversold zone. I've been telling you guys for the past 2 to 3 weeks that the bears are in control based on the MACD on the weekly chart. These are signals you can go pull up on TradingView. You can research it. You can educate yourself about it so you know what the hell I'm talking about here. The RSI and the MACD, obviously there are other signals you want to look at, but from a simplicity standpoint, those are easy things to look at to get an idea of where we're at in the cycle. And we do continue to see higher highs and higher lows from the macro. Global liquidity continues to be a leading indicator in addition to other items. And look, like I've been telling you guys, the bears are in control. So let them do their thing, send the price to the oversold zone, and we will bottom out and start reversing. So there's also the seasonality aspect at play here. September is usually not a great month. Now, we want to validate that with the information, but remember, this whole cycle has been a bit different this year because the tariff crash pushed everything back. When have you seen Bitcoin rally to new highs in August? It's usually sell in May, go away, but Bitcoin set a new high of $124,000. That's never happened in the history, right? Usually in the summer, it's boring. There's usually the big rally in Q2, and then come June, boom, big crash, boring, sideways, summer chop. Then come late Q3, and then into Q4, you see the fireworks. Well, here we're experiencing a healthy correction, despite what people are feeling. People are feeling bored, scared, frustrated. I see the comments, right? The depression is starting to set in. But if they only understood their playing out the market cycles, because they don't understand the patterns and the chart data and so forth, and the whales and the market makers, that's how they want you to feel. But the macro thesis is still in play here. So patience is the key. Bitcoin's going to bottom out soon. Again, it's approaching that oversold zone, and it can get into the extreme oversold zone like we saw in February out of the tariff crash, and then we rally out of there. So it doesn't mean it has to get to the extreme oversold zone, but that would actually be very good because it prepares us for a face melting rally in Q4. If you know your metrics, if you know the charts, you know what I'm talking about, right? If you've been here before and you've seen how the market works. So that is what's at play here. And here, Bob Lucas, great analyst, he said, here we are now 5 weeks later, Bitcoin looking to print its weekly cycle low, holding up okay, in my opinion. Over $118,000 confirms a new cycle. Until then, bears/downside remain in control. So exactly what I've been saying for the past 2 weeks, right? With regards to the $118,000, he's saying once we start coming out of this hole, once we cross 118,000, we're back in the driver's seat from a bull market perspective. And the reason why he's saying that is because markets can fake us out. It doesn't go in a straight line, up or down, right? So that's why people have been getting really impatient because they expected the downside we were seeing in, let's say, late August into early September, that might have been the bottom because the market started rallying up a bit. And I was like, hey, that's a bull trap. And then boom, here's your flush out, right? I was saying a flush out before to move up. And of course, you get people who are emotional. They need to know a certainty. They need to know the winning lottery numbers, right? But that's not how you invest. And we have to update our thesis and timeline based on the facts. So once again, be educated, not emotional. Something that's interesting that came out from Secretary of the Treasury, Scott Bessent, he said today, I think we can get the stock market up. And I tweeted out, that means they're either going to inject more liquidity from the Treasury general account or they're going to go to some form of QE. We'll have to wait and see. But it's the same playbook, folks. They can't let the stock market and real estate and crypto, all that go down. They can't let the collateral collapse because then the economy will collapse. We know how this house of cards is set up and they have to keep printing money. So this is where you have to have the macro thesis and understand the fundamentals and thesis here that the fiat system is a debt-based system, and that's why they have to keep printing. And of course, the asset prices are correlated to that. As they continue to debase and global liquidity goes up, the asset prices keep moving up. So that's the name of the game. And if you don't get that, you have to study a bit more, educate yourself, because it will help you not only in investing with crypto, but stocks, markets, and precious metals. So all of these things have been in a macro bull market. Go look at the chart, zoom out, and you'll see they are all moving to higher highs. And we're seeing a rotation of liquidity from these different assets. So the data does not lie. It's all there. Go to tradingview.com. I implore you to do that so that you can have the foundational knowledge. You don't need to be a Wall Street expert analyst. That's not what we're talking about here. But you need that foundational knowledge to understand what's happening in these markets and how the cycles play out and the cyclical patterns from the both from the micro and the macro playing out here, folks. So be patient. Everything's moving ahead. Now, big news out of the SEC. They have approved another index ETF. So the SEC has approved Hashdex NASDAQ Crypto Index US ETF to operate under new generic listing standards. The fund is now allowed to hold crypto assets beyond Bitcoin, Ethereum, including XRP, Solana, and XLM. What did we see just last week? The SEC approved the Grayscale Digital Large Cap Fund, which includes Bitcoin, Ethereum, Solana, XRP, and Cardano. So you can see the SEC is expanding their horizons here, approving these other altcoins. And if you caught my interview with Grayscale's head of research, Zach Pandel, I published that this morning. We went through the details and what has changed. And folks, in my interview with Commissioner Hester Peirce, which will be published next week, I interviewed her yesterday. The big takeaway for me is that she said with the new guidelines they put out last week, there's no longer the requirement of having futures markets to get spot ETFs approved. I've been talking about it, right, for a while, that XRP and Solana had the biggest chances of getting approved because they had the futures markets in place. Well, with this new guidance, HBAR, Cardano, AVAX, and the others can get approved, folks. Obviously, they meet the normal standards and requirements, right? But there's no need for futures. This opens up a world of opportunity here for altcoin ETFs and basket ETFs as we see the SEC is approving them, folks. They're including other coins. So very bullish, and the timing just ahead of Q4, right? And I believe we're going to get the individual ETF approvals very soon from what we're seeing here and also, in my interview with Commissioner Peirce yesterday. So folks, bullish times are ahead. Be patient. I can't stress that enough. You have to be patient. You got to control your emotions, right? And you got to make sure you're looking at data, not your gut, not emotions, not the market's up today, the market's down today. No, where are we from the macro? Where have we been? Where are we right now? Where we're going? So, folks, bullish times are ahead. Now, quick word from our sponsor, and that is Propy. Propy's leading the charge with putting real estate on chain. Folks, using Propy's platform, you can buy and sell a house or an apartment and receive crypto. You can sell your house for Bitcoin or XRP or Ethereum. Propy allows you to do that. And of course, their platform is powered by blockchain. So Propy is a licensed Web3 pioneer operating since 2017, and they have facilitated over $4 billion in transactions. Now, they use Coinbase for the crypto escrow service for the buying and selling. And folks, they put deeds on chain, and they have tokenized real estate. They've created NFTs for real estate and much more. So I'm a Propy token holder. I have been since 2018, folks. So when I discovered them, I realized they were ahead of the curve and no one else was, even close. And they are partnered with a lot of the realtor associations and much more. So Propy is doing some great things. So if you'd like to learn more about Propy, check out the link in the description. All right, we got more ETF news. BlackRock registered the name iShares Bitcoin Premium ETF. Filing coming soon. This is a covered call Bitcoin strategy in order to give Bitcoin some yield. This will be a 1933 Act spot product sequel to the $87 billion IBIT. So BlackRock expanding their suite of products around Bitcoin. This is interesting. The spot ETF has been an extreme success. I mean, the fastest growing ETF in the history of ETFs. And now they're creating a separate product with yield. So If you know BlackRock's doing it, you know what's coming, folks. This is why I keep telling you, be patient. The bull market's not over yet. So Eric Balchunas, ETF analyst at Bloomberg, says, given all the other coins that are to be ETFized, it's notable BlackRock is going to another Bitcoin product. In my opinion, it signifies they are going to build around Bitcoin and ETH and lay off the rest, at least for now. This makes the horse race for those other coins much more wide open. No secretariat to contend with. On the flip side, all other Bitcoin covered call ETFs currently on the market or in registration just shit their pants. Yeah, he's right there. So this is a big move by BlackRock, and you know Larry Fink, he's all in. They're doing a lot here. I think they're going to file for the other spot ETFs. Maybe not right away, but they will. But they are so successful. They're making so much money. They've got the largest Bitcoin ETF. I understand while there's no rush to go, grab up a whole bunch of other ETFs. But look, there's going to be demand from retail for these other products. So I don't think BlackRock is against making money here. Clearly, they are for making money, and I think they're going to want to diversify. But very big move here with this yield ETF. Now, folks, we've talked a lot about digital asset treasury companies, and that I've been saying, look, I like the trend. I like what companies are doing. I like that certain companies are taking some cash on their balance sheet and diversifying it to crypto assets. That's fine. But the flip side to that is a lot of these companies are raising capital, essentially leveraging themselves to buy crypto. And I said, that's dangerous, right? When they have so much leverage and you never know, some of these folks are going to blow up in the bear market. It's not that I want that to happen or, I'm rooting for that. I'm just saying we've seen this story before, too much leverage, right? But look at this. The SEC and Finra are going after some of these digital asset treasury companies. They're investigating them. So here's the headline. Unusual trading ahead of crypto treasury deals draws scrutiny from U.S. regulators. The SEC and Finra reached out to companies whose shares moved sharply before they announced plans to buy Bitcoin and other digital assets. So probably some shady stuff happening, and we'll see who gets caught here and what the penalty is going to be. But it's going to get messy. And then this is the thing, when you have so many people jumping in and everybody's trying to outpace each other, and you probably do some shady stuff they're not supposed to, trying to drive the stock price up. But this is where, again, guys, the writing's on the wall here, right? That we have to make sure if we are planning to take profits, we do it in the right time. Obviously, you got to do it in phases because no one can call the exact top, but there will be a bear market and there will be blow up. So just something to keep in mind. All right, moving ahead. Google takes a 5.4% stake in Bitcoin mining company Cipher Mining in a $3 billion deal. Wait a minute. Some people said Bitcoin and crypto is a scam. It's a fad. It's only used for money laundering. Why would Google, why would all the banks and stock exchanges be investing in this? This is why you need to be educated, folks, right? Not just read headlines, but go into the details of who is investing, what are they building, and much more. Look at SEC filings and all that, right? So Google has acquired a 5.4% stake in Bitcoin mining company Cipher Mining as part of a $3 billion multi-year data center deal with artificial intelligence data center company FluidStack. According to a Thursday announcement, Google will receive its stake in Cipher Mining in exchange for guaranteeing $1.4 billion of FluidStack's obligations in the contract with Cipher. This plays a part of a larger $3 billion FluidStack deal with Cipher to lease computing power for 10 years. The news follows another similar deal between Google and FluidStack in late August. The internet search behemoth became the largest shareholder of Bitcoin miner TeraWulf by acquiring 14% of the company in exchange for guaranteeing obligations in a separate FluidStack deal. Do you see what's happening here? There is some key chess pieces moving here on the board, and some of the biggest names, folks. And this is why I'm telling you, man, I'm bullish on this bull market cycle, but also the future ones, 2028 and much more. So it's exciting times. It's amazing to see the dominoes that are falling here. Now, look at this. Spark integrates PayPal USD into its stablecoin lending markets. So PayPal stablecoin PYUSD, which is built on Ethereum and multiple blockchains. PayPal's been making a huge move and trying to get more adoption and distribution of their stablecoin, and rightfully so. The Genius Act has been passed, and the stablecoin race is on. So, PayPal has partnered with decentralized finance protocol Spark to expand liquidity for its US dollar stablecoin PYUSD. PayPal's stablecoin has attracted more than $135 million in deposits since its August listing on Sparkland, a lending market focused on stablecoins, according to a Thursday statement. So Sparkland was launched in 2023 out of the MakerDAO ecosystem and later integrated into Maker's successor entity, Sky. It runs the Spark liquidity layer, which is backed by more than $8 billion in stablecoin reserves, according to the protocol. So, folks, I'm going to try to get someone back from PayPal. I think I mentioned this in another podcast to talk about this. I had interviewed Edwin Aoki last year where we talked about PayPal and their moves. So I'll try to get you guys the updates. So stay tuned. I think it'll be a good interview because PayPal is a payment giant. They're doing a lot with crypto, of course. Now, this is a great example of tokenization. Sharplink to tokenize SBET stock on Ethereum with Superstate. So the tokenization of different assets, especially stocks, is heating up. You got a lot of competition here. So Sharplink Gaming, one of the world's largest public holders of Ether, announced plans to tokenize its common stock on the Ethereum blockchain. Sharplink has partnered with the financial technology firm Superstate to tokenize its NASDAQ-listed stock SBET through Superstate's Open Bell tokenization platform, the company said Thursday. Here's a quote: "Tokenizing Sharplink's equity directly on Ethereum is far more than a technological achievement. It is a statement about where we believe the future of the global markets are headed," Sharplink co-CEO Joseph Colomb said. So very bullish news, folks. As I've been telling you guys for a long time, right? The markets, the economies, and the governments will be running on blockchain rails. And here is another example. 9 European banks joined forces to issue MiCA compliant euro stablecoins. 9 European banks. See what's happening? The future is going to be more digital, not less digital. You will have a wallet that's going to include your digital identity, your stablecoins, your crypto assets, and much more. So let me give you the details here, guys. The banking giants involved are ING, Banca Sella, KBC, Danske Bank, Deka Bank, Unicredit, SEB, Kaiser Bank, if I'm saying that right, and Raiffeisen Bank International. So the banks, the stock exchanges, the payment companies, the credit card companies are all here building with the technology, offering up crypto trading services, custody, and much more. This is incredible. So the 9 bank-backed digital payment instrument leveraging blockchain technology aims to become a trusted European payment standard in the digital ecosystem, according to a press release on Thursday. Notice it didn't say using SWIFT, leveraging blockchain technology. So the naysayers, the fraudsters, the people still on the fence, wake up. Wake the hell up and see what's happening here. This is incredible. And we're seeing this across the globe, right? And the United States, of course, is trying to push the US dollar stablecoin because there's a geopolitical competition at hand here with the US dollar as the world reserve currency. We've seen China and other countries come together, try to bypass the US dollar, but the US just made a major chess move by passing the Genius Act. And here's an example. China opens Shanghai digital yuan hub for cross-border blockchain services. My goodness. Folks, I know I've said this before. Share this news with the skeptics, the blockchain skeptics, the crypto skeptics, and have them tell you why world superpowers are doing this, right? Are they having fun? Are they playing around here? No, they're not playing around. This is the future. So China's central bank has opened up a new operations center for digital yuan in Shanghai. The center will oversee platforms for cross-border payments, blockchain services, and digital assets as part of the digital yuan's ongoing development. State-run Xinhua News Agency, I probably butchered that, reported the news on Thursday, citing a statement from the People's Bank of China. According to the news reports, the center is designed to promote the digital yuan's role in global finance. With the launch, officials unveiled a cross-border payments platform, a blockchain service platform, and a digital asset platform. Again, not SWIFT, not your old TradFi rails. No. Blockchain rails. So again, the future economy, markets, and governments will run on blockchain rails, folks. Voting will be on the blockchain. Your identity will be on the blockchain and much more. That's what's coming. I hope you see what is taking place here. And folks, I'll remind you of my prediction. I said that Hong Kong, under the control of China, has been a testing ground for crypto and digital assets. We know ETFs are alive in Hong Kong. You can do anything you want in crypto in Hong Kong. In China, you can't. It's very restricted. I believe because I've talked about the currency issue China's had. They don't want the currency leaving the country. So what's the best option to give people access to crypto? Open up the ETFs because the ETFs just stay there. It's in a wrapper. It's under their version of the SEC. So I believe China is going to open up crypto trading via ETFs to their citizens in the mainland, and that's going to bring a ton of capital. So book it. I don't know when, but I think it's going to be soon. China realizes that the United States is now moving at a rapid pace. We got stablecoin legislation in place. We got tons of ETFs from Wall Street. We got the market structure bill, which is expected to be passed this Q4. So get ready, folks. Bull market's not over. Be patient. Don't be emotional. Be educated. If you appreciate this content, folks, please sign up for my free email newsletter. It is 100% free. Check out the link in the description. It's available on Substack. And folks, check out my book on Amazon. It is available in paperback and digital, and my course at mycryptocourse.com. This is a comprehensive course that teaches you everything about crypto. If you want to expand your knowledge about the asset class and the technology and what the hell is happening with all the moving parts and components, this is the course for you, packed with tons of value. So go to mycryptocourse.com. Folks, thank you so much for watching and listening. I appreciate you all, and I'll talk to you all later.